What's up, you guys? Sean from Invest to Live, and we're going to jump into Bed Bath & Beyond and how you could have played this with almost no risk, just grab the upside and protected yourself on the downside. So anyways, thanks for jumping in. That's what we're going to cover today. We're not going to waste any time at all. So let's give you the synopsis of what happened. In a nutshell, some information came out of Bed Bath & Beyond. It was heavily shorted, relatively low float, meaning not a ton of shares out there, and the retail trade jumped all over this thing. Now, essentially, there were a couple of key components. We know for one thing that there was a lot of interest in and around this as it started moving up. We saw a bit of a short squeeze, then we saw a gamma squeeze where things escalated very quickly. We also saw that activist investor Ryan Cohen, you probably know the name, he also had been buying up a significant amount of shares. So there was a lot going on in and around the stock and in and around the company, which for all real purposes here is not a great company in the first place. Yeah, they have stores and yeah, you can shop there. So it's not some pretend fluff business, but the numbers are not good. I'll share some of that with you in a moment here. But the real crux of what we want to talk about is how you play these kinds of moves in a way that reduces your risk while giving you an opportunity to make money on the upside. Now, I want to be clear here. There's no financial advice. I'm not your financial advisor. I'm not a CPA. This is how I play these things. So I want to kick off with the real story of how I played this. I want to share some information, and we're going to talk about how we protect ourselves. As soon as I saw what was happening with Bed Bath & Beyond, the volume was going crazy, saw what other people were doing. I immediately jumped in and started playing short-term, short-duration calls, just slightly above the price. And I made a quick 150% gain on those calls in less than 24 hours because I was able to jump in at the right time. Now, granted, if I had held out longer, I would have made a bit more money. But as a general thesis, although I am a fan of holding things as long as possible for something like this where I expected a floor to come quickly, I was out, I was taking my money off the table. I have another friend who's also a significant options trader. He had a sizable position, many hundreds, if not thousands of calls open. And what he was doing was continuously moving his stop. With every increase in price, he adjusted his stop every single time. So he would keep retaining more profit, retaining more profit, retaining more profit. But before we get into that, I want to share sort of the what's going on. So let me share my screen here and we'll start here. So in a nutshell, here's what we know, right? Bed Bath & Beyond, as of today, which is Friday the 19th, and you can see here that over the past 5 days, this thing's down about 18%. Now, of course, you may say to yourself, well, that's not that bad. But keep in mind, there's a lot of reason to be concerned here for these big drops that sort of came, then came again here. And even today on the 1 day, we're down some 33, 34%. Now, if we push this thing out, sure, the stock price is still significantly up from where it was. But these are sort of the warning signs of what's going on, right? Ryan Cohen is now announced that he's out of the stock and has sold all his shares. There's some fizzling on the retail side here. I think there's been a lot of profit taking. So the big story on the news, on Twitter, on YouTube is how, once again, it's a manipulated market. Once again, investors got their shirts taken. Once again, retail loses. Stop that nonsense right now. Stop that nonsense. If you are trading the markets, you do not get to use the whiny excuse of manipulation. It's not fair. It is on you. When you execute your money in the markets, you're responsible to protect your money. Full stop. So blaming Ryan Cohen, blaming memes, blaming whoever, give me a break. I mean, please. There are so many ways to get in, take your profit, and get out. And you have to make sure, if you don't know what you're doing, you shouldn't be trading these massive stocks in the first place that are going wild here, or meme stocks, really not massive. But as of today, that's where we are, right? We're down some 18% over the past 5 days. And again, I'm going to call it, we're down almost 34% on the day today. And here's the quick news story, right? Bed Bath & Beyond stocks crashing. Traders outraged as Ryan Cohen takes 68 million in stock, right? We've got stories of students making millions of dollars, right? The problem is there are always going to be winners and there's always going to be losers. You have to remember that when you buy a position, whether it's an option or equity or whatever the case might be, you are making what should be an informed decision about why things are happening. It could be because you understand technical analysis. It could be because you understand the economic viability of the underlying company or companies that represent the ETF, if that's the case. But it's on you to know that. The most important part, though, is not just that. It's about protecting and hedging yourself, okay? So one thing I want to call up before we jump into those details as well is anytime you're looking to get into something, if you are not looking at the investor relations page, again, it's on you. I show this on tons of videos. I talk about this all the time. All it takes is going to the investor overview page and seeing what the most recent documents are. Okay, so here's Bed Bath & Beyond. I'm literally on investor overview with events and presentations. The most recent information is the investor presentation. That's right here. I'm not going to do a full deep dive here because I think there's plenty of people already talking about it, but I just want to call this out. So this came out in June, okay? We're now in August, so it's only been less than 2 months. All right, so in a nutshell, they do a great job of releasing information here. Of course, there's always significant things going on from a forward-looking statement perspective. And they're going to talk about a few key things right off the bat, right? There's executive transitions, and there's some outlook and commentary in here. I'm not going to speak to all these things. I urge you to go and do this yourself because it's not the point of what the video is today. I just want to share this with you that there are significant things that are going on here. There are changes in the business at the top level. But here's the real problem, right? We're looking at Q1 22 highlights. They're down 23% on comparable sales, right? They're down 27%. They have a decline of negative 27% that they even call out as reflecting a rapid shift in consumer spending. I'm on the first page of results. We've got two bad things right off the bat, okay? They have gross margins of only about 24%. And, I just want to call this out. Like, are you seeing a lot of good things here that make you think there's a reason this should keep going up? Because I'm not seeing it, okay? And there is a plan here, excuse me, to have an aggressive action on inventory cost and CapEx to align with rapidly changing environments and performance. Let me sum this up for you. We are losing money. We are seeing declines. We don't know what to do, so we're going to start to find ways to cut costs across the board. That is not the sign of health. It doesn't mean they can't go up, okay? But it doesn't mean they go up 300%, right? So you got to keep that in mind. Further, here's just a quick view, right? I'm not suggesting you need to be an expert on deep diving into investor decks and presentations. What I'm saying is on the first couple of pages, they're going to call out the key things you need to know as an investor. Net sales, total comp, look at that, down 23%. Banner comp, sales versus Q1 21, down 27%. Adjusted EBITDA, negative 224 million, right? Not great gross margins here. Again, there is not good news here. Negative, 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 right? I mean, look at this team. It doesn't take a lot of brilliance here to figure out what's going on here. Even in terms of how they're going to business, the part I want to call this out is something that I thought was really interesting here. Sorry, I must have skipped right over it too fast. Okay. Now, before everyone says, well, Sean, they're a retail store. COVID hurt them, obviously. Well, let's stop there for a second. They called out here, literally on page 9, digital channel continues to represent approximately 40% of total net sales. So they're already doing 40% of their net sales online already. So how would COVID have impacted that from that perspective, right? And that's when you're like, come on. The reason I'm sharing all this is because I don't want to hear this argument of, but this is a really good company and people don't realize the opportunity that's going on here, right? I mean, it's just not the case, okay? It's just not the case. There's major issues here. I'm not suggesting that the leadership and the people that work here aren't doing the best they can. I believe that there's a lot of good people here, and I believe there's a lot of people who are working really hard, okay? The problem is the numbers are not reflecting where success is going to come from. The numbers are not reflecting the future of the business. The numbers are not reflecting why the price should go through the roof. Now, let's talk about Ryan Cohen for a second here. He jumped into this thing going months back, so it's not like he suddenly jumped in and jumped out. And I don't know the guy. I could care less about what he does or doesn't do, to be totally frank with you, but I want to call this out. We can't get mad at someone for exiting a position, making tens of millions of dollars. That's what his job is as an investor. Whether he's an activist investor or not, it still is the point that he gets into things to increase his income or net gains from those investments. So here's the point of this entire video in a nutshell, okay? And I won't belabor it. You are in control of your investments, and there is a simple thing you can do to protect your overall downside risk. You need to use stops, and you need to limit your losses. It's that simple, okay? I don't care if it's your first day or you've been doing this for 25 years. If you are entering a speculative position that you believe is going to go up, whether it's straight buying the shares or you're using complex options, you can set stop loss limits at any point that you want so that you're protected for more than whatever that number is. Now, before someone comes and says it, there are times when you can see massive, what's called gaps, where prices drop significantly or go up significantly. It's a huge gap from one price to the next. So there are times that exist where a stop will sometimes basically not work, and you almost have somewhat of what we call like a market sell. That is very rare. It does not happen very often. So just if you're thinking like, is this thing 100% guaranteed? Nothing is 100% guaranteed. However, leveraging stops is the best way, especially with a large degree of volume like we saw in these meme stock moves. If you think this thing's going to go through the roof, start using a stop loss. And the idea behind this is, let's say you buy it at 10. I'm going to limit my losses to only 5% of the total money I put in. So I'm going to put a stop in at $9.50. If it comes down to $9.50, I'm out of the position. I take a little bit of a loss on my trade. Life goes on. If it starts to go up 11, 12, 13, 14, $15, you can absolutely move that stop every single time and keep pushing it up and up and up to protect the profits. What you can also do is you can leverage trailing stops. A trailing stop is a stop that will follow the price up, but then limit the downside automatically. It could be set to 5% under the current price, so it keeps following. And then at any time it drops down, you're out. One of the things I hear all the time as a rebuttal to this, by the way, this is how most professionals do it. I'm going to explain that in a second as well. One of the rebuttals I hear all the time is like, yeah, but you know what happens? Then it goes down and goes right back up again. No one is saying you can't get back into the position. The point of this is not to have catastrophic losses in your portfolio that wipe you out completely. That's the real problem here, is too many people take catastrophic losses and they say things like, I'm just going to dollar cost average my way down. You're dollar costing, you're going to use DCA in a company that is losing money, barely knows what the future is going to hold, and has no actual plan to improve the outcome. That's the plan you're using. That doesn't make a lot of sense to me. So someone made a point to me the other day, which I want to just kind of call this out because I think it's important. They were saying, well, a lot of professionals don't use stops. It's not true in the essence of the meaning of it. Most large-scale professional traders, and I'm talking hedge funds, institutional traders, etc., or just large net worth folks who are doing this, what we'll typically do is, if we're not using stops or trailing stops, we're using highly correlative or decorrelative hedging techniques, right? So I'm just going to use this as an example. With Palantir, when the prices got really high, I was making videos about, you need to start thinking about marrying puts to your position so you can protect yourself on the downside, and you can also make a lot of profit on that downside swing. You can then put that back in the position or just take it out as, a profitable income now. There's a million ways to hedge yourself, but hedging can be complex. Hedging is not as straightforward as just buying a stock. So that's why I'm saying, if you are going to play these kinds of positions and you're scared of losing money, which frankly is a perfectly good, healthy thing, just put some stops in there, put some trailing stops. It's literally that simple. What's driving me crazy is listening to all of the, financial experts who are brand new to trading talking about how, like, see, this is what happens. Retail always gets the bad end of the stick here. Listen, I hear you. Sometimes you make bad trades. Sometimes you're going to lose money, but you don't have to have catastrophic losses. By giving yourself a little bit of a buffer to protect the downside risk, all you're doing is protecting yourself from making a bad decision. And the beauty of this is, if you limit it to, just say, for example, 5%, and you lose a couple times in a row, but then on one big one, you get a huge takeoff or a rocket ship goes off, you've made up not only for all those losses, but now all these subsequent profits you're going to have. And as positions move up and you keep moving those stops, you're locking in your profits. There's like no risk here. Now, again, anything can happen. You can always lose money. There's a million ways to lose money, but you can't keep blaming the market, the stocks, the activist investors, manipulation. Come on. I mean, how long are we going to blame manipulation when we can see what's going on? Is it really manipulation if you already know what's happening? That's absurd. So look, a little bit of a rant here, but I think it's important because in chasing these huge kinds of moves, these big plays, if you're not looking to protect the risk, then it's all risk. But if you're looking to protect your profit, then there's a light at the end of the tunnel. So look, with that, I'd love your comments down below. If you happen to catch this whole thing, what I'd love to hear is, do you use stops? Do you use hedging? That would be cool to know what you do and get a consensus from the comments overall. So listen, everybody, thanks so much for watching. Really appreciate it. I think this is a great sort of, what's happening with Bed Bath & Beyond is a great example of, like, look, if you're new to the markets, it's time to start learning how they really work and what you can do to protect yourself, because the amount of wealth generated in trading and investing is massive, but the amount of wealth lost is just as massive. You can choose to be on whichever side of that you want to be. I personally want to be on the side that makes the money, not loses it. So with that, I hope everyone has a great day. Again, I have a whole list of topics that have been asked for videos. I'm working on them. If you have anything else you want to see, please let me know. No topic is too complex. So please, anything you want to talk about, we'd love to hear it. Thanks for watching, everybody, and good luck out there.